The market is awaiting the CPI data and the Fed rate hike. But right now, what we see is that Bitcoin is actually bouncing from the support trend line of this rising wedge, I should say, because that's a bearish pattern. Now, if you look at the price action, what you can observe from here is that it is an engulfing candle, which kind of shows like buyers have some strength. So it can go to the 18K level before it gets rejected. We need to actually see whether we break to the upside or we get rejected. We will have to wait and see how the data is coming out. For XRP, it's again, we are waiting here in the pattern as we discussed yesterday, but we just bounced from the bottom. Instead of going here, which we expected, 0.36, it kind of started bouncing from 0.37. So now if you are able to break through 0.4, there is a glimpse of hope that you are directly riding towards 0.5. But tomorrow's data is going to be important because you see a lot of volatility in the market. Say this asset dropped a little bit. Right now, considering the price, 2.6 to 2.3, it may not be a huge fluctuation, but you do see markets doing these kind of stuff. And if you are there trying to analyze this, now you have an idea of like, okay, that's going to happen. I'm already in the trade and I haven't moved anything because I've entered this trade way earlier. I entered before the breakout here as I'm informing the scientific investor family, and all the members are aware of all these happening in the market. Keeping that in mind, when you see fluctuations, don't directly go bullish or bearish until you see a breakout and a bounce. That is going to be important because what we are going to look at here is some key data, which is like, really interesting because once you have an understanding about this, now you have more idea about what data you may expect. And when the data comes out, how can you interpret that considering your portfolio is there, right? So we will actually look at the interest rate hike cycles and how it actually turned out and where it is right now as they push this up, and then look at what really is happening. So this is December the 12th, which is today. This is what I'm reading. And I'm like, okay, that really is interesting because this is actually coming out from the New York Fed survey. And I'm like, okay, that's kind of a little bit legit than just the mass media, right? So I'm like, okay, the expected inflation rate over next year fell to 5.2% from 5.9 in October. So I'm like, okay, that really is a positive outlook. Great. So as you go into the next year, if people are actually giving you the narrative of, oh, it's doom, gloom, that kind of stuff, we may even have a surprise move to the upside first and then go into that gloom, doom kind of stuff. So keeping you informed is my job and I'm trying to take you guys through that idea. Look at this. This is the inflation rate. You can, now, being a technical guy, I would actually say like, okay, this kind of shows you a reversal signal and a break to the downside. The only question which I have is whether that's going to retest. So we are going to discuss through that in detail. Welcome to the Scientific Investor family, where the normal retail guys learn how to become the next top 10% of this world. So as we look at this, it's the inflation. Great. So one thing is clear, you have a neckline. Just being technical, you actually got to see a shoulder. Then you went up, you made a head here. Now this is not a clear shoulder, but you actually broke to the downside. So if it's normal common question for a technical guy, you would be saying like, okay, that's something like I expect it to first come down to this range and then slow down a little bit. So most likely you may actually see that. You may see the price coming down at a time when you actually see the expectation for the future is slowing down in inflation, which is good. But at the same time, Fed is still going up. They have not peaked out when the inflation has peaked out. This is going to hit the economy. I agree. And when you are looking at what's actually happening, some of these are not good. Say 35% of the millionaires say they won't have enough to retire. Then you look at the market and you see like, okay, that's not great. It's layoff. It's layoff. It's layoff. You go to different sectors, you are looking at different things, and almost big companies, all of them are giving you this idea, the majority, right? Then you're like, okay, that means the consumer spending is going to slow down, and this may impact in next 3 months, next 6 months, next 8 months, 9 months. But in the meantime, if the market goes to the upside, don't be surprised. Always this happens, right? The market is preparing for a continuous downside, another 50% drop. Everyone is negative. But then what happens? The market goes back up when majority is not prepared for that. So right now, for example, you are looking at this one, XRP. Fine. If the price does not break through 0.4, we are coming back down, most likely having a wick towards 0.35. If that actually happens to break to the upside, which is bullish, now you do get some momentum, because you are looking at the Bitcoin and you're like, okay, the Bitcoin can actually slowly grind back up. So if that happens in this pattern, what does that actually mean in a little bit higher time zone? That does mean, yeah, you have a huge overhead resistance to break through, but you're going to come close to that. Now that's going to be a huge challenge between the bulls and bears trying to break through one another. So even though the market here, the crypto market, is a decentralized one, human beings who invest in that lives in a centralized world. So yes, we are waiting for centralized world's data to come out. So the CPI and the Fed rate hike will actually make or break this scenario, because usually you do follow the RSI, right? You kind of look at what the pattern is, and at least for the time being, you're not actually getting a positive tone here. Like you saw in the short term, you do get that narrative in the strength index. It just shows you like, okay, I'm slowing down. I don't have that much strength. So that's not actually a great sign. So if you come to this level and still get rejected, that means you do have some room to the downside. So that's the narrative on a daily chart for Bitcoin. And if that happens on a 3-day chart, that's kind of the medium term outlook. Now you're like, okay, if that happens, are we actually looking for a breakout? And I'm like, yes. Then the price action coming back down at that time should be the max kind of bottom, because that will be a retest, and that most likely is going to actually start the next bull market. So most likely this can be a possibility. You go up, you get rejected somewhere here, so you have horizontal resistance, you have the pattern trend line resistance short term, and then you have the macro trend line resistance. So you get resisted here close to 18K, and then come back down here, making a double bottom, and then bounce. That can be an ideal situation for all of us who are waiting to see this data here. Now, if that's what Bitcoin is doing, then what shall we actually look forward for XRP at the same time duration? I would actually argue that this breaks to the upside, which is going to be really great, a break to the upside, and then you should break to the level here. This is like, a level which we've been focusing from some time. Then the issue with XRP is that you have a lot of overhead resistance zones which we have created before. So one, you need to break this range, 0.4, then you need to break 0.45, then 0.5. Okay, fine. What's that range? You zoom out and you see that range is valid from a long period of time. After that, you have a long way to the upside. So for XRP to actually say we are going for the next big one, you need to see the price going through 0.45 and 0.55. Now this is actually super bullish. Why is that? When you look at Bitcoin, yes, it's 18,000, 19,000 for a short-term recovery signal, but the macro recovery signal will only come close to 30,000. Understand? You are literally doing around 80 to 100% price fluctuation. Whereas here in the XRP, you only have to break through 0.55 to actually give you a signal that we are going much higher. The next move to the upside is starting. And you, in the price action terms, has already received a trend here, which shows it's a rising trend line. Then you go on a 3-day chart, weekly chart, whichever you want to take out. But all of them gives you one signal. You broke higher, you came back, you retested. That's what we just talked on Bitcoin. If that happens, then you are going to find the bottom. So I'm like, okay, is XRP leading the market now? At least that's what you can understand from the charts. We kind of see, okay, this bounced up, Bitcoin did not. And most likely Bitcoin is going to do that soon and then drop back to make a bottom. So when Bitcoin goes up to this level, interesting part is to see where XRP lands. Is it actually 0.55? Is it going to be 0.88? These levels are going to be super important. So we are going to literally follow the market and discuss through all these possibilities which the market actually shows us. Because right now, it is a lot of confusing data in the market. You do see some of them going up, some of them coming back down, some of them dropping hard, right? You can literally see, say for example, Chili's. It has been rallying from a long time with the anticipation of the Football World Cup and other things. But right now it's slowing down, it's coming back down. But if you are like me, you are looking for the macro pattern. Even if you actually drop till this level, you are still inside this pattern. Nothing actually changes. There are a lot of different assets which had this pattern, but they broke to the downside here and came back to this level and is now bouncing. So for Chili's, you are looking at this pattern and you will actually argue like, okay, that broke higher. Right now we are doing the retest. Now that does give you an idea. Most likely this support range which made here and then this range which was created, and now we are looking for something. We don't know where the next shoulder is going to be, but most likely this is what we are going to observe. You're going to get your shoulder here, then another one, then most likely another one here, which is an inverse head and shoulder inside a corrective channel, which shows you a reversal signal. Last time, we did not actually get all the parameters which we wanted to get for a head and shoulder. So in this market, make sure you take your time to understand what the market is showing you, because the language of technical analysis is going to help you in many different ways to position yourself. Now, say for example, we are looking at the market and saying like, okay, am I going to be the best timer of the market? Most likely not, because the bots, the high frequency trading bots, algorithms, it's all there. So if you're buying something at $1 and it drops to 0.8, it's fine. Because if your target is $2, you're still going to $2. Because when you take a trade, the question is, what's your risk to reward? If you're buying at $1, you're saying, okay, I'm willing to lose 50% of this to get 100% in reward. That's the normal method. So don't be afraid when someone says, okay, you have a tendency to lose 50% before you actually gain 100%. That's how the market system actually works. So now, if you are aware of that and you want to look for more in that kind of idea for a lot of different assets, you can look at the Patreon. The link is given in the description. Believe me, if the data tomorrow is going to be positive, you get something positive in the CPI and the Fed slows down, market may move to the upside. That's going to be something of interest for each and every one of us. Right now, for that easy part, go look at the dollar. If the dollar is breaking to the downside, going towards this level, it's going to be bullish for the market. Then go look at the market. The markets right now is starting to bounce from a level. And I'm like, okay, that's crazy. Because the narrative out there is that the volatility is increasing. You go look at the VIX, right? And you see the volatility is increasing. From the 19s, it's up to 25 already. And for a long period of time, you never went above 34. So that is something you need to consider. Historical level of resistance is close to 35, and you go look at these ranges. Why is that important? Because when you are at the bottom, say here, this is your support, and that's March 2020, right? You're here at the peak. You're going up. So you did get massive volatility here at the top. Now you're here at the bottom. Before that, you have time to move up to make this volatility reaching this point. Now, if you go back in history, you can look at all the different times when this happened, but this is actually going to give you one thing clearly. This is 2008-2009 recession. The volatility reached this level, but at the same time, You go look at what dollar is doing, what the market is doing, and it kind of give you an idea. We are at a resistance, and most likely a retest and rejection to the downside is the best case scenario for the market to be positive. Because if you're going to break this one to the upside, you may not have a long rally before you start coming back. It can be a fake out, it can be small upside and then coming back down, which can be a massive drop to the downside too. So we will wait for the data and see how things evolve. So if you received value for your time, please do hit that like and subscribe button. And if you have 5 more minutes, please do visit this channel of mine and take your time to watch a video. I'll meet you guys on the next video. Bye-bye.